Okay, let's just jump right in. We need to talk about a huge policy reversal, one that has really sent shockwaves through the entire global tech market.
Oh, absolutely.
We're talking specifically about the, what, $50 billion AI chip industry?
That's the one.
For the last few years, all the talk has been about U.S. restrictions on selling advanced chips to China. That has been the defining story.
It's shaped everything.
And now suddenly a massive door has just, well, it's cracked open.
Yeah.
So today we are doing a deep dive into Nvidia, into the sudden permission they have to sell their high-end H200 processors in China, and frankly, the stunning cost of entry the U.S. government is demanding.
It really is a remarkable pivot,
Right.
and I think we have to start with the H200 itself because that chip is central to this whole story.
Right, what is it exactly?
So these are high-end GPUs, graphics processing units. They're specifically built for, the most demanding AI workloads for large language models.
Oh, foundational stuff.
Absolutely foundational to modern AI. And crucially, they were part of NVIDIA's Hopper series, and until just now, they were squarely under a U.S. export ban.
A ban that was designed to slow China's AI progress.
Exactly. And it was a ban that was having a real material impact on NVIDIA's business, which makes this reversal just such a huge commercial event.
So our mission today is a bit complex. We're not just looking at the U.S. decision.
Yeah.
We also need to dissect the really unusual financial terms attached to it.
Highly unusual.
And then we need to anticipate the countermoves, right? Because what's Beijing going to do? Getting approval from Washington is only half the battle.
That's it. This is a multi-layered negotiation. You've got technology, finance, and geopolitics all swirling around this one single chip.
Okay, so let's unpack this. We've had these blanket restrictions for so long. How did this sudden shift even happen? What was the official announcement?
Well, the official word came out in a very modern and very high-stakes way.
Also?
It came directly from President Trump on his platform, Truth Social.
Really? Not a press release from the Commerce Department?
Nope, just a post. He stated that the U.S. government would now permit Nvidia to sell its H200 processors to, and this is the quote, approved customers in China.
Wow. And just like that, the old policy was gone.
Just like that. It signaled the end of those much stricter limitations, at least for this class of AI chip.
And the sources we looked at, they mentioned the diplomatic side of this. Trump made it a point to highlight that, didn't he?
He did. He really emphasized the choreography of it all, noting he had personally informed President Xi Jinping of the decision.
And what was the justification?
He stressed that the approval was granted, quote, under conditions that allow for continued strong national security. And he specifically added that President Xi responded positively.
Responded positively.
Yeah.
But the real story is in those conditions, I imagine.
Oh, that's where the story is, yes.
Huh?
This wasn't just a simple waiver. It came with a very, very specific and financially heavy price of admission.
Okay, what is it?
The U.S. government is going to take a direct 25% cut from the revenue of each and every sale.
Wait, say that again? 25%?
25%.
That is an incredible chunk of revenue.
Yeah.
It's not a tariff, which is on imports. It's not an export duty. What even is that? It sounds like a direct stake in the sale.
That's a good way to put it. It's being framed as a national security dividend.
A national security dividend.
Right. The logic is because these chips are critical dual-use technology, they have both commercial and, potential military applications, the government asserts the right to manage their export.
So by taking a 25% share, the U.S. is, what? Monetizing the risk.
Precisely. They're monetizing the strategic risk. And that revenue is supposedly earmarked to fund other national security initiatives to subsidize more advanced U.S. chip research.
To theoretically maintain our technological lead.
That's the idea. It's an innovative, if you could call it that, but a highly aggressive way to manage technology transfer.
So it's basically, we'll sell you our advanced tech, but you're going to pay for us to stay ahead of you. And this isn't just an Nvidia thing, right? The sources made that clear. This is a new playbook.
That's absolutely correct. This 25% model, it's not exclusive to NVIDIA. The plan is for it to apply right across the board.
To who? AMD, Intel.
Exactly. Advanced Micro Devices, Intel, anyone selling similar high-end products into this newly reopened Chinese market. It sets a whole new regulatory precedent.
So with that huge tax, for lack of a better word, on their sales, how did NVIDIA react? I mean, were they outraged, or did they just see the dollar signs?
They were openly supportive, which tells you everything you need to know about the size of the opportunity here.
Right.
They applauded the decision. They put out a statement saying it supports high-paying jobs, manufacturing in America, and they called the sale a thoughtful balance that is great for America.
A thoughtful balance. I have to pause on that phrase.
Mm.
A 25% cut feels less like a balance and more like a punitive measure dressed up as policy.
Well, it shows they're willing to pay almost anything to get back into that massive market.
They must be.
They are. And when you look at the financials, you really start to understand why they can absorb a hit like that. But the bigger question, and this is where it gets really interesting,
Okay.
is what they're actually being allowed to sell. The H200 chip, as powerful as it is part of Nvidia's previous generation. It's from the Hopper series.
Okay, so this isn't China getting the absolute cutting-edge, latest and greatest tech.
Not even close. The H200 has already been superseded by Nvidia's flagship Blackwell chips.
Yeah.
Those are significantly more powerful, way faster, more memory efficient.
And there's another one coming, isn't there?
Yep. They're already announcing the next generation after that, the Rubin processors.
Yeah.
The H200 is their star player from last season, not their current MVP.
So it's like the U.S. is selling its top-of-the-line sports car from last year,
Right.
but charging a futuristic luxury price for it. Yeah. So this seems to be the core strategy.
I think so.
Maintain a 1 or 2 generation gap, and then use the money from selling the older tech to fund the development of the new tech.
That is the strategic calculation. President Trump was explicit about this. He noted that the newer chips, Blackwell and Rubin, are not part of the deal.
So the gap is maintained by design.
It's maintained by design, but now it's also being monetized to the tune of 25% of gross revenue.
Okay, let's talk about the size of that monetization. Let's connect
yeah.
this to the financials, because the stakes here are just colossal.
They're huge.
Previously, when the U.S. restricted sales of the H20 chip, that was the earlier one designed for China, Nvidia, said that ban was costing them roughly, what was it?
$8 billion per quarter.
$8 billion a quarter. And that was just for the H20.
Exactly. The H200 is a much more capable and therefore a much more expensive chip. So this opportunity is substantially larger.
And what's the total size of the prize? The total addressable market?
Well, the number Nvidia put out there, the one that really got investors' attention, is that they estimate the TAM in China could be worth as much as $50 billion over time.
$50 billion. Yeah. Okay, that explains why they'll stomach a 25% cut.
It certainly does.
And when you look at the company's health, you see why it's so compelling for them. The source material noted their market cap is just massive, nearly $4.5 trillion. But the number that really jumps out is their gross margin.
The gross margin is the key to all of this. It's currently sitting at a very, very healthy 70.05%.
70%. Which, for anyone who doesn't follow chip manufacturing, is just extraordinary.
It's almost unheard of for a hardware company.
Right. 70 cents on every dollar of revenue is gross profit. So even after the government takes its quarter off the top, Nvidia is still left with an overwhelmingly profitable sale.
And they get access to a massive growth market they were totally locked out of. It's vital for their growth, even with this unprecedented fee.
However,
Exactly. There's always a however.
if we connect this to the bigger picture, it becomes clear pretty fast that U.S. approval is just the first hurdle.
It's just step one.
You're talking about Beijing's reaction. We've opened the door. Is China just going to walk right through and buy $50 billion worth of chips?
It is highly unlikely to be that simple. Even with the green light from Washington, the path to high-volume sales is seriously complicated by China's own internal industrial policy.
And their main goal there is self-sufficiency.
The underlying objective in Beijing is, and has been for years, achieving semiconductor self-sufficiency. You hear the term domestic substitution all the time.
So even if the chips are legally available to buy, Chinese authorities are going to make it painful to actually buy and use them.
That's precisely the mechanism they're preparing. They've been pushing domestic companies to use locally produced chips for a while. Now they're getting ready to place very real limits on these U.S. imports to make sure they don't kill that domestic effort.
So they're using regulatory friction. They're using it to favor their own champions, like Huawei, who are moving fast on their own AI chips.
That's the playbook.
What kind of hurdles are we actually talking about here?
Well, this is being formulated by their top economic and industry bodies, the National Development and Reform Commission, and the Ministry of Industry and Information Technology. The NDRC and MIT,
These are the heavy hitters.
these are the powerful agencies, and they are looking at some potentially severe restrictions.
Like what? Give us the specifics.
Okay, first, any company that wants to buy these H200 chips might have to apply for explicit government approval first.
Ugh, So that adds massive delays and uncertainty right there.
Huge uncertainty. And second, and this is maybe more important, they could implement other conditions, things like usage limits or offering huge subsidies for domestic alternatives, all designed to push buyers toward local chips instead of Nvidia's.
So China's essentially saying, sure, you can buy these American chips, but if you want that juicy government contract or R&D support from us, you better be using our domestic stuff.
That is the critical insight. And it raises this really important question, what does this whole dual regulatory dynamic mean for the final outcome?
Right.
Because those policies coming out of Beijing could have a material impact on NVIDIA's actual results. So investors are, rightly being told to temper their enthusiasm.
Because if the process is too complex or the limits are too tight, that $50 billion market, it just becomes a number on a slide.
It becomes a theoretical maximum, not a commercial reality.
Yeah.
Exactly.
Wow. We've covered a dizzying amount of ground here. Trade policy, military tech, huge corporate finance. Let's try to boil this all down. What does this all mean? What are the three core takeaways here?
Okay, takeaway number one. The U.S. decision is a very, very limited permission.
Right.
It's only for the previous generation H200 chips, not the cutting-edge stuff like Blackwell or Rubin.
Right.
And it comes with that extremely high fee, the 25% revenue cut.
A fee that's meant to fund America's own tech dominance.
That's the plan.
Okay, takeaway number two. Despite all those limits, the financial opportunity is still massive. Nvidia sees a potential $50 billion market.
And that access is huge for them. It mitigates the loss from the old bands, and because of that incredible gross margin, the deal is still highly profitable for the company.
And then the third takeaway.
The path forward is really, really complex. China is putting up its own powerful regulatory roadblocks.
Government approvals, pushing domestic competitors like Huawei.
Exactly. They're using their regulatory power to speed up their own move towards self-sufficiency.
So from an investor's perspective, how does all this uncertainty play out in the valuation? What are the sources saying?
Well, it's the definition of a high-risk, high-reward situation. Despite all this regulatory fog, the valuation context we saw suggests investors are still very optimistic.
Really?
Yeah. Nvidia stock is apparently priced at 25 times next year's expected sales, which some would say looks attractive.
Which implies that investors believe Nvidia will figure out a way to navigate those Chinese hurdles and grab a big chunk of that $50 billion.
That's what it implies, that they believe the opportunity is real and attainable.
Which brings us back to the core dynamic we should all be watching. You have the U.S. selling its last-gen tech at this never-before-seen premium.
Taking a quarter of the revenue right off the top.
Meanwhile, China is using its own bureaucracy to manage the intake of these chips, basically using them as a temporary bridge to accelerate and perfect their own domestic supply chain.
It's a strategic chess game, and it's being played with billions and billions of dollars.
And that leads us to the final thought, the provocative question feud 'em all over. Given that the U.S. is selling the H200s, but is holding back the true cutting edge, the Blackwell and Rubin chips, will that enormous 25% revenue cut actually be enough to maintain U.S. dominance and extend that tech lead?
Or does this whole policy just end up inadvertently subsidizing China's transition to self-sufficiency? Does it give them the exact tech leverage they need at a price to finally succeed in their own domestic substitution goals?
That is the pivotal question, isn't it? It hangs over the entire future of global AI competition. Thank you for joining us for this deep dive into the volatile intersection of technology, finance, and geopolitics. We invite you to continue exploring these complex dynamics as they unfold.